Everyone. Welcome to this conference hosted by Bank of America Security. Thanks for their support. Thank you for everyone. This is a small group meetings, and I will first conduct a briefing for the first quarter of 2023, and then followed by a Q&A session. Our first quarter performance was actually doing fairly well. In the first quarter, the bank's earning was up 124%, more than double, reaching $10.5 billion. And group earning was up 78.2%. Total earning in the first quarter for the group is $10.78 billion. This is by far the largest single quarter performance we have seen for many years, thanks to the trading gain contribution from FX swap. In the first 4 months, again, we have reached 80% growth with $13.99 billion earning for the groups. So I suspect the first quarters and second quarter performance will largely to be outperformed versus last year. Next page on the group's earning breakdowns. The net income was up 7.5% in the first quarter, mainly contributed by the NIM expansions on the year-on-year comparison. The trading gain was up 335% again. This is contributed by their FX swap gain business. The overall earning for the groups, I think we're on the right track. The fee income, the NII core earnings, it's pretty stable, and with the help of the trading gain, we suspect the first quarter numbers should be fairly strong. Going forward, next page. Return on equity. We have actually reached 13.4% on an annualized basis for the first quarter, and the return on asset is 1%. We actually announced our dividends a couple weeks ago with the 100% payout from last year's earning. The cash dividend is $1.24. The stock dividend is $0.08. This is by far the most generous among all the financial holding company in Taiwan. And in terms of the dividend, the cash dividend yield, close to 4%, which is ranking number 2 among all the 14 listed financial holding company in Taiwan. And we have a strong capital base, and we have been very committed with our shareholders, trying to maximize shareholders' value. So every year we try to pay out high cash dividend payout ratio and maintain a strong dividend yield for the investors. And I think with this year's earning continuing to outperform last year's, I suspect the dividend yield should be attractive as well for 2024. Capital position. First quarter, the total CAR ratio for the bank is 15% exact, and the Tier 1 ratio for the bank is 13.06%. And all these is actually common equity Tier 1. We don't have any hyper Tier 1 capital. So all these numbers actually meeting the requirement for the DSIP. Even for the higher standard in 2025, we already reaching that requirement. The total CAR for FSC is 122.48%. Again, it's pretty stable consider the volatility we have seen last year. And then moving on to the loan growth. First quarter loan growth was somewhat staggering. I think this is mostly intentional. Although we are still seeing demand across the board, but given the slowdown in global economy, we are being more cautious on the risk we're taking, and the pricing competition has always been intensified. So we want to make sure that we compensate for the risk we're taking. So we're trying to rationalize our loan books, and at the same time, it will help us preserve the capital. The SME growth was slightly stronger than large corporate, but this is not due to the fact that we're bullish on the SME sector. It's mainly because that we're seeing a lot of the large corporate are repaying their debt, given the rising costs on their U.S. dollar lending. So the repayment pressure is higher than for the large corporate segment. And the mortgage definitely, across the banking sector, everyone is more cautious, more conservative, and also the transaction volume for the housing property market has decreased quite a bit. So naturally, the demand for mortgage product will be softer as well. And looking on the loan breakdown by different industries, again, all across the board, the quote-unquote comparison, the loans actually seems to be softer, all different sector, except maybe service industries. I think it really suggests the overall corporate demand with the economic conditions as well as inventory issue for many manufacturers all create much softer loan demand for the industries. If you look at the loan breakdown by different regions, again, we're seeing a lot of a decline from offshore banking units. Generally speaking, Greater China area, the loan demand, the credit tightenings has contributed to the decline in OBUs. Overseas, like I said, the dollars lending costs become much more expensive with the Fed rate hike, so the demand naturally will be softer. And the domestic, given the tighter credit screening and also the demand for the mortgage balance has declined, all contribute the domestic loan growth to be somewhat softer than previous quarters. Next page on the different currency, in foreign currency and the dollar breakdown. As you can see, foreign currency lending a lot more softer versus NT dollars. And even with the NT dollars and US dollar appreciation, we're still seeing a large decline on dollar lending. So it really suggests the demand for dollar is it's really softer than the last few quarters. As far as deposit goes, I think most of the industry players are still aggressively taking deposit base, and we had too much deposit. LDRs continue to trend down lower for the last few quarters, so we have been trying to rationalize our deposit base. But again, with the individual and corporate continue to dive into U.S. time deposit products, it's natural that the time deposit continue to inch up higher. But we still maintain a fairly steady deposit base. Compared with the peers, our total deposit growth is a lot less aggressive versus the peer. So as I mentioned, the dollars the lending LDR is trending down lower because the loan demand for dollar product is very soft, and the total LDR is trending down further to 71.82% in last quarter. The spread maintained fairly stable in the last few quarters. We have seen overseas lending yields and domestic lending yield continue to inch up higher, but the deposit cost has become much more expensive as well. So the interest spread for the overseas business had trended down slightly, and the domestic spread is up slightly, so that neutralized the overall interest spread movement to 1.59% in the first quarter. The NIM performance is largely the same. We have seen improvements on the dollar NIMs, but for the foreign currency, particularly with the US dollar NIM, it continues to trend down further, given the downward pressure on the LDR, especially for the dollar business, where we will continue to see pressure on the US dollar NIM. For the fee income business, we have witnessed a strong growth on the total gross wealth management fee in the first quarter. It was up 54.8% quarter-on-quarter, mainly contributed by the bank insurance fee, and reached $714 million in total fee for the wealth management. And the bank fee was up 8.7% quarter-on-quarter, contributed by the wealth management fee income. And also on the year-on-year comparison, the wealth management was up 4.2% as well. And moving on to asset qualities, NPL ratio was up slightly. This is mainly contributed by there's a European largest retirement home operator called BofA. There's some accounting fraudulent activity took place late last year, so the franchise is undergoing some debt restructuring process. So we were forced to the NPL was booked in first quarter, but we have already provided all the necessary provision we needed in December of last year. So there are also a couple of smaller cases that are happening that we have taken a provision in December of 2022. So the number NPL ratio is up slightly, but the provision is already sufficient enough. So it shouldn't be any problem for the first half this year, which is why you can see the credit cost is a lot less than what was seeing last year. And the overall asset quality across the board, different sector remain largely the same. And the increase in NPL formation that was mentioned earlier on the OPIA cases and a couple smaller ones. And last but not least, these are some of the financial statements. And in terms of the overseas franchise, worth mentioning is that in the first quarter in March 2023, we have opened another Cambodian sub-branch in Kendo, which is located in Nampan area. So total overseas office is reaching 17 different countries, and 22 of those offices in the so-called New South Bang area. So that concludes my presentations, and anyone in the groups, anybody who wants to raise any question, I'm more than welcome to answer some of your concern and question. Thank you.
Hi, I have a question on FX swap gain business. How much did the FX swap gain contribute in the first quarter 2023 earnings? And could you forecast how much FX swap gain will be in 2023 full year? Thanks.
Sure, of course. Yes, everyone is very excited and very interested in understanding the FX swap business. We have done a phenomenal job in the first quarter this year. The total gain from the FX swap related business is about 4.7 billion dollars, and this is not unlikely to be repeated every quarter, every month. It's something that we been doing very aggressively and will continue to do so. This is more a trading opportunity that we're seeing and we capture, but it's kind of difficult to forecast because the visibility it's quite low, and we can't really just give a numbers or a forecast in that regard. But I think given the strong foreign currency transaction capability from Megabank, and with the US dollars and NT dollars interest spread continue to be, it's widened, but it's continue to be a pretty sizable spread in between. I think our trading desk will continue to find trading opportunity to capitalize on the gain, and it could provide strong support for the earning for the next couple months, even in the first half of this year. Hope that answered your question. Anyone? More question? I think there's
Yes,
another one
can
question.
you?
Yes, please go ahead.
Yes. Can you comment on the outlook for fee income business, particularly on the wealth management fee income outlook? Thank you.
Sure, of course. Fee income business will continue to be a strong part of our growth for this year or even beyond. Our bank, our management team has been working really hard on expanding the fee income business, particularly on the wealth management. We have seen pretty solid growth in the first quarters, almost double of what we've seen last quarters in 2022. And I think with the much stabilized equity market, and also with the bond yield volatility is stabilizing, hopefully, I think the investor appetite will continue to improve in 2023. And on top of that, we have our bank is still in the final stage of ramping up our private banking business. It should be officially launched in the second half of this year. And this will provide a platform for more sophisticated, high net worth individual customers. And we believe that with our strong brands and a very wealthy individual customer base we have, I think we will continue to see strong wealth management numbers throughout this year. And also on top of that, we have seen more and more tourists coming in to Taiwan, and also overseas traveler going offshore as well. So that will really provide FX transaction fee income growth in the coming months as well. So both of these FX and wealth management fee should have a positive spin on overall fee income trend in the next a few quarters. To answer your question, I think I believe if no more question, I think our time is almost up, and I thank you for everyone's dialing. And if you have any question, you're more than welcome to contact us accordingly. And thank you for the participation of this event. Thank you. Bye-bye.